Kalpataru projects that is in focus as well. Let's quickly pull up that stock on the screens. If you see the revenue, a growth of around 17% coming in there. Net profit is pretty much flat. The margins have also seen a dip this time around. The stock is nearly at the day's lowest levels with cuts of 9% coming in there. Asta, very quickly, your view on a Kalpataru projects before we speak to the management.
Right. If I talk about the results were not in line with the estimates, and we believe that this counter can fall more. Maybe at around 850 to 830 odd levels, we can see this counter moving down. So stay away from this counter because results were not in a good shape.
Thank you so much for joining us on the show, Asta, and sharing your views and, in terms of the stocks that we've discussed already. Now, let's move on to the management of Kalpataru projects. We already spoke about the way numbers have been. Your revenues have gone up 18% in the third quarter, and we've seen almost a 12% growth coming in for the first 9 months. We have Amit Uplenchwar, Director, Kalpataru Projects International, joining in. Amit, firstly, good afternoon and welcome to the show. My first question coming to you is, specifically with regards to the quarter, has it firstly met your internal expectations? Because your guidance is already revised to 13 to 15%. From here on, where do you see it and how do you expect yourself to enter FY26?
Yeah, thank you very much. I think we need to put some context to the question before I answer that. As you know, we are in 6 segments. We operate in oil and gas, we operate in urban infra, we operate in building and factories, water and transmission. If you see at the beginning of the year, we had guided on 5 counts. We said that our order booking target should be close to 22 to 23,000 crores for the full year. We are already at 20,000 plus Y to date, and with 2,500 crores thereabouts already in L1. So I think we will meet our order guidance target at 100%. We had said that our PBT for the full year should be in the range of 4.5% to 5%. If you see at standalone level, this year my Q3 was already, we were at 4.5%. And on a console level, we dipped, and that is primarily on account, it's not an operational miss. On our consolidated, we have our subsidiaries in Sweden and Brazil. And in Brazil, because of the devaluation of the BRL or the Brazilian lira against the dollar, is what caused a hit to us. But on an operational level, we had a very, very robust EBITDA, even at our Brazilian subsidiary level. So we are meeting the PBT guidance for the full year. In terms of revenue, yes, we've had a bit of a miss because we had guided for between 15 to 20% at the beginning of the year. But we've had one segment, which is water, where we've had a shortfall in revenue, and primarily because of lower allocation from the government towards the utility companies in most states, because Q1 and Q2 was election year. This is across the industry with all players. Despite that, we've been able to pull a 17% growth in Q3, and I think Q4 looks to be very, very robust. Given the fact, I think we should end up between 12 to 13% on a year-on-year basis, in spite of having a miss in our water business, which we now see picking up going forward from Q1 of next year. We have a very robust order book at 10,000 crores in our water business. A massive allocation of 65,000 crores in the budget by Honorable Finance Minister. So I think this was a timing issue because of an event that was beyond anybody's control, but should come back next year. So far as there were 2 other parameters. So I think one was our net working capital days. We are down to 112 days. We had said we should be at 100 days, one of the best in the industry. And I think we are quite confident at the end of Q4, we should be close to 100 days of net working capital and an interest cost of 2% thereabout of our revenue.
Right. So, Amit, considering all these factors, now you expect a recovery going forward. I want to understand water business, what is the outlook going to be for FY26? Now, while there was a downtick that we've seen in the 9-month period, do you expect the double-digit growth back in the picture for FY26 with the improved execution now being on cards? And would this again result in higher margins as well? If you can give a margin picture as well for the overall business.
So overall, like I said, our margins have been in the region of 4.5%-5% PBT, which we had said at the beginning of the year. We are sticking with that. We are trying to get to closer to 5%, which is the higher band of guidance for our PBT in Q4. And hopefully we continue that trend in FY26. So far as water is concerned, we can look at the macros, right? We can look at the path that in front of us. Government has given, again, a massive allocation in the budget towards water for next year. That's a good sign. We have a very good order book at 10,000 crores, which is a second good sign. So I don't see if these allocations start happening, and that's the indication that we are getting. We've already collected close to 240 odd crores in our water division up to date. And as this trend shall continue, I don't see a reason why they should not do good in FY26.
Okay, so considering that there would be an improvement in water business and the pipeline, I want to understand more on the order pipeline now that you have an order book of 61,000 crore. Firstly, talk about the execution. How much is to be executed in the fourth quarter of this financial year, and FY26, what is the kind of execution that we'll be looking out for? And order inflows also, despite the concerns that you've already mentioned, we've seen a decent uptick in order inflows as well. So what is the bidding opportunity also that you're seeing in terms of where the order inflows are concerned for FY26?
Okay, so I will take that one by one. There
Yeah.
were 5 questions in one. But so as you correctly mentioned, we've got 61,000 crores of order book. And I think from an execution uptake, if you look at our, building and water business, our oil and gas business, our transmission business, they all grew in terms of revenue in excess of 35% 9 months of the year and until Q3 of this year as well. Going forward, I think this trend should continue next year because our order book is very, very robust across all these sectors. You asked me for opportunity. I see no slowdown in building and factories. The transmission and substation space, India and globally, continues to be very, very robust. Our urban infra, now we have multiple metro projects across the city of Bhopal, Nagpur, Kanpur, and the trend seems to be continuing also in the next couple of years to come. So a good order book, execution which is keeping up in pace. We've done close to 12,600 crores of revenue in 9 months. And we've done almost, in this quarter, if you see on my console level, around 5,700 crores of revenue. And if I consider a similar growth of 16-17% going into Q4 as well, I think we have a robust platform for growth in all parameters, be it revenue, PBT, and reducing net working capital days to get even a stronger balance sheet. So I think Q4 looks very good. FY26 bases the orders that we have in hand and the macroeconomic scenario being very, very, rosy in terms of order outlook. I think this seems to be a basis that FY26 seems to be a good year, at least for now. But of course, we'll come back to you more when we do our budgeting exercise towards the end of the year.
Keep a focus on the upcoming quarters for how the orders have panned out for Kalpataru projects. But thank you so much, thank you so much, Amit, for joining and sharing the perspective on what's the outlook forward for Kalpataru Projects International. But with that, it's time to, thank you. With that, it's time to slip into a short break. Lots more lined up on